In this video, I want to consider the advantages of investing in commercial papers. In other words, you are making quick returns with minimal risk. And so here are the advantages of, commercial papers. Number one is low risk. For investment grade issuers, for companies who are strong, stable, they have a reputation for for good performance. Then of course these companies are considered of lower credit risk. So commercial papers issued by large financially stable companies with high credit ratings are considered low risk. They are classified as low risk instruments, relatively speaking, and they are typically safe for institutional investors, especially when issued by reputable corporation. So institutions, fund managers, big fund managers, they tend to patronize these. They tend to key into this kind of investment vehicle. Number two is short-term investments. Short-term investments, this is a very important advantage, with maturity typically ranging, from overnight to about 270 days. That's between a month and 3 months, between 30 days and between 30 and 90 days. That's it's a very short maturity period. Commercial papers offer a short-term investment options. This is ideal for investors who want to park their cash, safely for a brief period. Instead of keeping it in the bank, it may not really yield much. They prefer, parking their cash, into this particular investment vehicle. So it yields more than what the bank could offer in a typical interest-bearing accounts. Number three is high liquidity. High liquidity. Commercial papers, are highly liquid, meaning they can be quickly bought or sold in the secondary market. It's highly liquid, particularly if the issuing company is strong, is stable, is reputable, and is doing financially well, and has a high credit rating. This makes them a convenient option for investors needing access to cash, within a short-term periods. And so that liquidity is there. You could dispose your investments at any time you so wish. The market, there's a ready market for you to carry out that transaction. Number four is convertible yield. Convertible yield, or rather competitive yield. Yield. Commercial paper generally offer better yield than short-term instruments. Short-term instruments like treasury bills or certificate of deposits, making them attractive for, institutional investors seeking a higher return, on short-term investments. It's very attractive for institutions. They call them institutional investors because they have the capital, they have the fund they will want to put aside for a short period of time. So this particular investment is very attractive to institutional investors. Number five is there's no interest payments. We should bear that at the back of our minds. No interest payment. Commercial papers are issued at a discount to the face value. So there's no periodic interest payment like what is obtainable in bonds. All right. So investors can earn interest through the difference between the purchase value and the face value at maturity. There's no payment of interest at all. What takes place here is that the instrument is issued at a discount. Let's say it is worth maybe 100,000. You may buy it at probably 80,000 naira. So that difference of 20,000 is what you get as your interest, as your gain, your profit, your returns. There's no fixed regular returns like what's obtainable in bonds. Number 6 is cost effective for issuers. Cost effective for issuers. Actually, it costs less for companies to issue these instruments. For corporations, issuing commercial papers, is often a cost-effective way to raise short-term capital. It typically has lower interest rates than bank loans or lines of credit because it's based on the issuer's credit worthiness compared to the issuer going to borrow money from the bank in the short term. It's better they issue this commercial paper. All right. I like the interest rate in the country. My country now is about 30%. All right. About 30%. So instead of, the company going to the bank to borrow money at 30%, they can issue a commercial paper that will be discounted by maybe 20%. All right. So I think it's a better option. And so there's that cost effectiveness. Please subscribe to this channel and like this video so that it will motivate me to bring you contents that is designed to make you financially literate and to help you to become a better investor so you could gain financial freedom as early as possible. Number 7 is diversification. Commercial papers can provide portfolio diversification, particularly in the short-term debt sector. Right, so investors can use them to balance the risk of their portfolios by adding low-risk short-term duration instruments. In the case you have other longer-term instruments like longer-term bonds that may mature in maybe 2, 3, 5, 10, 20 years. You could use this lower short-term instrument like commercial papers to augment your portfolio, to diversify your portfolio away from that this longer duration instruments. So it's a very nice way of diversifying your portfolio. It's an efficient way of spreading your risk. Number 8 is flexible issuance. Flexible issuance. Commercial papers can be issued by, with various maturities, allowing issuers to meet specific short-term financing needs. They want to raise money for the short term, then of course they can go ahead and issue these commercial papers. This flexibility is beneficial for companies managing working capital or seasonal cash flow requirement. They want to see how they can manage their working capital, efficiently and effectively, and they want to equally meet up with demands like payroll, short-term cost of running an organization. You can go for this kind of instruments. Number 9 is there's no collateral required. There's no collateral. It's an kind of insecure, debt instrument. Commercial papers do not require collateral, which is beneficial for issuers who do not want to pledge assets. Unlike, secured bonds. Secured bonds are obtained, with collaterals by the company. The company will pledge maybe their plants or equipment as collateral. But in the case of commercial paper, you don't pledge anything. The entire scheme is based on the credit worthiness and the reputation of the company issuing these papers. So instead, the issuer's strong, credit rating is the primary factor, in securing the debt. Their credit worthiness. Companies like MTN, companies like flour mills, other big companies like that, they can issue this kind of paper on an unsecured basis because of the reputation and the strengths of their balance sheet and their performance, reputation in time past, and their credit worthiness and credit rating. Number 10 is widely available, and commercial papers, are available to institutional investors and money market funds, making them an accessible tool for managing short-term investment strategies and cash reserves. For those fund managers who have huge amount of money, kept aside and they want to benefit from short-term investments of this nature, then of course this is a very good investment for them. So these advantages, makes commercial papers an attractive investment for institutions looking for lower risk, high liquid, short-term investment options with competitive yield. That is it. So both the investor and the issuer, will stand to benefit. The issuer will issue these papers at a cost-effective, manner, and the investors will equally gain within a very short time.